Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure. Good to be with you again, Jim.
Josef, do you have a special offer for our listeners?
Yes, we introduced coverage, or we're introducing coverage this week on the pipeline and infrastructure as well as our energy and energy service names. So we're adding coverage on Enbridge, Keyera, Pembina Pipeline, TC Energy, and Topaz Energy. And and because we're introducing coverage on a whole new group of names, we're giving your listeners a discount on a quarterly subscription. Normally it's $249 a quarter, $100 off, $149. That offer is open until the end of the month, and the promotion code, which you'll probably have in your notes, HSR for House Street Radio 21. So HSR 21 is the promo code to get the $100 off, and that offer will stay open through the end of April.
Josef, what's the big challenge facing oil and gas right now?
Well, you've got two issues: demand because of the the problems of the coronavirus mutations and pickup in some countries. You're looking at India, which had 160,000 new cases a day last week. Now over 260,000 cases a day. So they're really having to take off. Japan is now talking about closing down Tokyo and Osaka, the two largest cities in Japan, because they've got in a few months the Olympics, and they're trying to knock the caseload down. And some of these mutations, there's reports now starting to come out in the medical literature that they are able to evade some of the antibodies in some of the vaccines. And so we're going to need boosters, and we're going to need to have new versions. And Pfizer's CEO has talked about that they're going to probably require you to have a third vaccine within a few months of you getting your second one, which will have the ability to handle these mutations and the ability of them to evade, the antibodies in the current version of the Pfizer vaccine. So you've got an issue there on that side. At the same time, you've got OPEC increasing production. OPEC in the month of May will add 350,000 ex-Saudi Arabia. Saudi Arabia is going to bring on another 250,000. So you've got 600,000 barrels of more production coming on, plus the U.S. raised production this week by 100,000. So they could probably bring on another 500,000 barrels between now and the summertime. And the total increase that the Saudis are bringing on is 2.1 million over the months of May, June, and July. So you've got 2.1 to maybe even 2.8 to 3 million barrels of more capacity coming on between now and the late summer. And I don't believe demand will grow more than 1 million and a half. So instead of everybody talking about an inventory decline and that we're getting back into the 5-year range, I think we're going to see a build during Q2 and even more so in Q3. And we're even seeing the Federal Reserve of Dallas, which is probably the most notable group that would know about energy. They're even in their latest report that came out last week, showing an increase in inventories in the OECD during the third and fourth quarter of 2021. Again, you have a build in inventory. The prices that are there today are very attractive, and for the industry, $61 today, even though it's down $1.50 because of the weekly data. But I think we're going to see a break of 58. We're kind of in a trading range now between 64 and 58 at the bottom. We bust over on a close over 64. The bulls are right, who are saying $70 this summer because demand is recovering. And then the break of 58 is if the problem with the vaccines and immunization continues and a weak demand and too much supply, we break 58 on a close, we're going down. I think we're going down. I'm in the camp that believes we'll break 58, and potentially we could come down to the low 50s during Q2, and that might set up another great buying opportunity in the sector like we got in March of 2020.
We'll have more with Josef Schachter right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Josef Schachter. Joseph, was there anything in the federal budget that was positive for oil and gas in Canada?
Well, the incentives and the potential write-offs for developing, new technologies, carbon capture, methane capture, helping on the ESG front. There are some things in the budget that will be helpful to the industry. Outside of that, the continuation of some of the wage support for some of the companies that are needing it. We're still seeing layoffs in Calgary in some of the oil patch because of some of the mergers that have occurred. And so, accounting and back office staff and engineers and others that are duplicate are being let go, which is disappointing. The disappointing part of mergers and acquisitions. I think we're sitting, with a massive budget deficit, so at some point tax increases are going to come. The U.S. is already talking about it going from 21 to 25 or 28, whatever Biden can get through. I think tomorrow is going to be an interesting day for the oil patch because that's the Earth Day meeting that Biden is having with, our Prime Minister and other government leaders around the world, trying to get them to lower emissions by 50% between now and the end of the decade. That's a big increase, and of course, in terms of improvement, but it's really going to be up to what happens in India and China if they're willing to shut down their coal-fired electricity industry, which is the biggest part of their numbers, and massive amounts of jobs, especially in India, that if they don't play ball, Biden's hope is moot.
Well, I was just going to bring up the subject. India and China are opening up hundreds of coal-fired power plants to power their electric vehicles. How much of a savings is that? Doesn't coal burn a whole lot dirtier than finely refined gasoline or low-carbon diesel with vehicles that have emission controls?
Well, if you want to use the right fuel, it should be the transition fuel of natural gas or imported LNG. And, anything else, is not going to help the environment, diesel or gasoline, and to create the electricity for electric cars, that might work in maybe the major cities in India, but I don't know if it works in rural India, and how do you have charging stations, in the third world? I think people are too optimistic about the amount of EV success and penetration. Will it be, a success in Canada, the States, and some parts of Europe? Yes, we'll probably see 20% to 30% of the fleet by the end of the decade being electric cars versus maybe under 2% now. But to get to total electric cars with no gasoline, the fueled vehicles, number one, you might do it by 2050 in North America and maybe Europe, but you're sure not going to be doing that in China, India, third world countries, South America, Africa, emerging economies where there's just don't have the financial capability to get to clean fuel, solar or wind power, to build that kind of infrastructure to have sufficient amounts of electricity to fuel the battery powered vehicles. So I think the optimism and the goals for the OECD are realistic, but when you get past the OECD and go to these other countries which do not have the financial resources and do not have, and also need the people employed in the coal industry, China, which, sings a good song about becoming more environmentally supportive of the climate change goals and is big in wind power and solar and other things, but they're still opening up new coal mines to create electricity. So in one hand, you're doing the right thing, and on the other hand, you're doing the wrong thing. So if they don't stop, building, coal-fired facilities, these are facilities that are built for 20, 30 years, and, if they're building them, you're just shooting a hole in the whole goal.
We'll have more with Josef Schachter right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Joseph, we have some MPs who are against oil and gas exploration. Vancouver City Council is against oil and gas exploration. Stop it right now, they say. How does that feel in an industry, especially in Canada, where they're doing their very best to be as green as possible?
Well, number one, if you're in Vancouver, you're not drilling for oil in Vancouver. It's northeast BC that you're drilling for natural gas mainly, but some liquids there. Do we want to shut down the pulp and paper industry because of the pollution from there? Do you want to shut down the BC hydro industry because of the methane emissions? They can talk the talk, but they're not going to be able to walk the walk, because they won't even be able to do it within their own province, and they can't shut down the Alberta industry. And of course, how do you power vehicles right now? And how are they getting to work? Are they going by, the subway system or the city bus system, or are they driving their own vehicle? So they say they say one thing and do the reverse. And so until we can get a bigger longer range on the EV batteries, and so you can drive longer distances, and two, that they charge quicker and we have enough charging stations around, I think the optimism that they have, or the desire that they have, is not likely. But you want them to be singing that song, because that's the direction we want to go. But the timeline to get there is definitely not going to happen within the range that these environmentalists who are really pushing the agenda are going to see happen, because it's just unrealistic in the time frame, the amount of capital that has to be put in, the changes that have to be made in terms of technology improvements on the batteries and the storage life and charging time. We're maybe a decade away from that getting to the point where most of us, when we go into to buy a car, would say, okay, I'm paying more for maybe the battery car, but I have lower operating costs because I'm not paying for gasoline, and my electricity rates haven't gone up so much because we do have natural gas-fired electricity as well as more renewables over time.
I mean, I'm all in favor of a cleaner environment, but none of these people who demand immediate stops to oil and gas or mining, what are their alternatives? Do they realize there's 61 different minerals that take energy to extract from the earth to go into a cell phone? Are they willing to have a life without computers and cell phones? Because without minerals, they don't work. Without plastics, you don't have screens, you don't have casings for them, you probably don't have half the furniture in your home.
And just think about, if you want more electric batteries, you're going to need more nickel, more copper, more lithium, some rare earths which are from China, and all of this is going to take a lot of money to do. And to me, the timeline, and also the amount of energy used to bring these metals out of the earth and to process them requires you to use, fossil fuels.
Yeah, I don't see them building trolley cars out to the coal patch or the oil patch to transport natural gas.
Well, the industry in Alberta is talking about trying to bring electricity to, the compressor stations and going from using, diesel fuel to going to natural gas. And then the next phase, of course, is bringing direct electricity in there. And then how do you where does the direct electricity come from? Can it come from renewables? So there's a lot of money being spent on solar farms within Alberta, and then of course wind power in parts of Alberta. The wind is pretty strong, so they can have wind farms. But the problem is the amount of new electricity being provided is not enough yet to make a dent in the total demand from use of fossil fuels. And the key thing is, let's get to using natural gas as the interim, source until we do get enough renewables that can make a difference. But that's 2-3 decades down the road, even with the amount of money that's being spent. And remember, to build those solar panels and the solar farms and also the wind farms, you need a lot of metals that have to be found. And I was reading a report in The Economist magazine last week that said, given the amount of projects that are underway, between now and 2030, we will only have half the amount available of lithium that we need to get to the goals that everybody talks about in 2030.
So we need to find an alternative to lithium or something more efficient. Maybe the battery isn't the solution. I saw when I was in Europe, a French engineer developed a compressed air engine. It works just like your regular gasoline engine, only you inject compressed air in. Nobody's talking about that. Also in London, they had a compressed air car that could go 80 Ks at 80 kilometers an hour. No one's talking about that either.
Yeah, you got compressed air, you've got hydrogen. There's a lot of new things that are being talked about, but getting it up to scale and getting the ability to distribute that and be able to, put that in cars, that's really the limitation, is that we don't have, we have a massive fossil fuel distribution system, gas stations everywhere. You can go, with 2 blocks and you can get yourself, your tank filled up. But until we have enough of these alternatives that can go into the car and are easily accessible, be it hydrogen, be it natural gas, compressed air, be it propane whatever you want to put in there, you're going to need to have a distribution system, and we don't have one.
Also, nobody's talking about if you replace gasoline with electricity to power cars, where are governments going to raise all that money they get from carbon taxes, road taxes, royalties, and so on they get from gasoline? They're going to start charging those kind of numbers for your electricity, are they not?
Well, electricity rates are going to have to go a lot higher so that we can spend the amount of money needed to bring on enough renewables that we can make a dent in the demand for oil. There's reports coming out now that instead of needing 105 million barrels a day by the end of the decade versus, let's say, we're 95 right now, we were at 101 in January of 2020 before the pandemic. That we're going to need to spend significant amounts of money to get that availability. But the bears are saying that we're not going to need 105 million. We're only going to need 40 or 50 million barrels a day because the whole world is going to be driving electric cars, and we won't need that oil. Well, the reality is the emerging world is definitely not going to go there, and if the population grows by 2 billion people, over the next, between now and the next decade or two, that's going to, create more demand. And a lot of these people want electricity. They want to have, cars to move around or to move their farm, products to from rural areas to urban markets. to the customer. So all of these issues just mean that the assumptions of that we're going to be not using fossil fuel in the next 5-10 years, we're going to be shrinking in terms of demand. I don't buy that. I think, that we're going to, by 2030, we're going to be using 105 million or more. The increase in demand will not come from North America because we will be moving to more fuel efficiency, and we'll be using new technologies, and we will see more renewables built in North America, the OECD countries. And then I think if you look at 2050, when everybody's throwing numbers around, we might need 110, 120 million. Well, if the industry doesn't have enough decent pricing, they won't be able to bring and replace declines. And most North American companies have 20% decline rates because of OPEC having so much oil. It might only be 9 or 10% worldwide. Well, if you need 100 million barrels, let's say in 2022, that means you got to find 10 million barrels a day of new capacity. We're not spending enough money to even find half that.
Without oil and gas, where are governments going to get the revenue to carry out all these very expensive promises they've made in their last few budgets?
I think it's coming out of your and my pocket, and everyone else's that's listening to this. Taxes are going to have to go up. Biden's doing it in the States for corporate taxes and for the wealthy. But at the end, it goes to the middle class. If you need serious amounts of money, the middle class has to be taxed. So do they start talking about changing the capital gains rates, where you take half into income in Canada and then it's taxed at your marginal rate? Do they start taxing capital gains on your homes if you sell it? Do they tax, they're now putting in that 1% tax for vacant homes that are owned by foreigners? They're looking at every possible way to find new revenue once the pandemic is over. Right now, they don't mind deficits because of the pandemic, and politically that's acceptable by the Canadian population. But I think once the pandemic's behind us, and hopefully that's by the end of the year, that we're all sufficiently vaccinated, except for the hopefully a small amount of people that are anti-vaxxers, and right now that seems to be about 30% of the population in Canada and the States that don't want it. More in the States, vociferously than in Canada. And then the issue is, what taxes, can they get it from? So they're taxing higher taxes on, big boats and, expensive cars. And, they'll be looking everywhere. The cigarette taxes are high. They'll be looking wherever they do. Maybe marijuana taxes will go up. There'll be, liquor taxes will go up. They're going to look wherever they can to find money, to balance the budget in the outlier years. But I think between now and let's say the end of this year, I don't think we'll hear much about it. But next year, if the COVID is behind us and the mutations are handled by additional vaccines or booster vaccines, they're going to be looking like crazy, and we're going to feel it in our pocketbooks.
Joseph, thank you so much for chatting with us.
My pleasure as always, Jim.
My guest has been Josef Schachter, founder of the Schachter Energy Report online at schachterenergyreport.ca. He was speaking to us from Calgary. Oh, and maybe remind our listeners once again about the special offer.
Yes, with the introduction of pipelines and infrastructure stocks on top of our energy and energy service stocks, we're making an offer to your listeners for $100 off of a quarterly subscription for new subscribers for the first quarter. So instead of $249 a quarter, it'll be $149 for the first quarter, and then renews thereafter at the $249 rate. And the code for it is HSR, House Street Radio, HSR21. And you just put the promo code into the section there when you walk through the website. And then also I would assume you're going to have something on that on your weekly email that you send out.
Thanks again, Joseph.
My pleasure as always, Jim. Always.
My guest has been Josef Schachter. If you have any questions for him or any of our other guests, you can send them to info@howestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.